Hi, everyone. This is Trish May with Keller Williams Integrity. And of course, as always, I'm here with Craig Collins of Sierra Pacific Mortgage. We're here today to talk to you guys about putting in the strongest offer and presenting yourselves as the strongest buyers in very competitive home buying situations.
Absolutely.
So
And
we're going to
oh, yeah, absolutely. And that's kind of the market we're experiencing today. So this is extremely relevant.
Yeah, very much so. We've told everybody how listing inventory is less than half of what it was last year, which was already a competitive market for buyers. So this year, it's even much more so. Almost every home has multiple offers that are escalating way above list price. So we want to help prepare you by talking about some readiness factors in terms of getting your loan and which products, benefits of certain loan products over others, as well as contingencies and things you should consider about the offer you want to put in. Craig, do
Well,
you want to start us off maybe by describing a couple of those loan types and the advantages of some over others?
yeah, absolutely. In a multiple offer situation, obviously cash is king. With financing, it's difficult to compete with cash, but when everything else is even, on the financing side of things, there's an FHA loan and a government loan, a VA loan. Those are loans that are backed by the federal government. And then we have conventional loans. Those are any loans that aren't insured or guaranteed by any government agency. Like I said, when everything else is even, most of the time sellers are they're more likely to accept a conventional offer. It's a little bit more attractive to them. When the appraisal process kind of happens, there's it's a little bit stricter on the FHA side. There's a little bit more hoops to jump through. There's different regulations for these government-backed loans. So it's more likely that an issue is going to arise that's going to result in the sellers having to complete a repair. Sometimes they're costly repairs. Where on the conventional side, it's not as strict, it's not as stringent, and these repairs, they're just not as likely. So um, it's just more likely that the seller is going to have to come out of pocket with an FHA loan compared to a conventional loan. So if we can always approve our buyers for a conventional loan, I do suggest that, especially in a multiple offer situation. It's just one way we can kind of help their loan stand out and put our best foot forward.
Thanks, Craig. I'm wondering on behalf of the buyers, is there any kind of disadvantage with a conventional loan? Like, does it come with necessarily higher interest rate or fees, anything like that?
So FHA loans are generally designed for first-time home buyers. Sometimes they do kind of warrant a little bit better, a more competitive interest rate. And oftentimes the down payment's a little bit less. It's 3.5% for FHA buyers. With a conventional loan, it can be up to 5. Sometimes we can get to 3 depending on other qualifications, but generally speaking across the board, an FHA loan is a little bit more lax on the qualifications, and it's just a little bit cheaper for folks that don't kind of have the capital to go conventional.
Yeah, so that's a good thing for folks to know. But I think, like you said, most sellers are going to prefer the lower risk conventional loan for the appraisal process, which they're going to they're usually going to be stuck with, or at least facing, something, the potential of some back that they've got to repair.
Absolutely. I mean, at the end of the day, the sellers want to, gross as much income, as much money as possible from selling their home. So if they can limit their exposure to potential costs, especially with the added regulations of an FHA loan, it just makes sense for them to kind of protect themselves and insulate themselves. So yes, I always would advise if we can go conventional, and especially if we're competing, it's usually a more advantageous loan program.
That's a terrific summary of, I think, the loan products and also the seller perspective, which as buyers, we have to really consider the perspective they're coming from. So some other notes on approaching sellers as a buyer and what a seller is going to find most attractive. Let's talk about some contingencies. Sometimes when we're talking about a second time home buyer, or at least, wherever you might be, but not a first time home buyer, you may have a home that you need to sell before you can buy a home or before you want to buy the home. that's also a really important contingency. So, some folks need to, because otherwise they can't qualify for that loan to buy the next home. But a seller is going to want to see that it's not contingent. That's an ideal thing for a seller. Um,
Exactly. I mean, a contingency is just another kind of requirement that the seller has to meet, that the buyers have to meet to close on the deal. And selling your home is a pretty big condition. And if you've ever sold a home before, it's not always easy. So the worst thing for a potential seller is to have their accepted offer fall out. And a buyer contingent on selling their home could potentially, cause that problem. So, if we can limit those contingencies, especially a large one like that, it's going to be a more attractive offer, like you were saying.
Yeah, and what I do want to touch on the fact that people may hear us seeming to talk about, out of both sides of our mouth on it. Oh, it's a great market, so why should it matter if there's a home sale contingency? But it's another risk factor for a seller accepting, deciding between multiple offers. So in this kind of market, any home can sell at the right price, but it is more risk. So, well said on that.
Yeah, absolutely. This is kind of assuming, multiple offer situations and everything else is even. If that's the one thing setting you apart, it could potentially be a deal breaker for a seller.
Right. So take home number one in terms of contingencies. If you can get a loan pre-approval without factoring in the sale of your current home, if you have one, then do it that way.
Absolutely.
Okay. Yeah. The next thing I think we both know is sellers would prefer not to give money back at closing. So everyone would love to get money back at closing, and the loan products allow a buyer to ask for money upfront in the offer to have credited at close. So if you're a buyer, consider how much you have on hand or scrape on hand. And if you can, try not to ask for any more that you need to in seller subsidy when you present the offer. When the sellers have multiple offers, they will probably choose the one that doesn't ask for money back or that asks for minimal.
Absolutely. Just to kind of, repeat what we've been saying, put yourself in the seller's shoes. If the purchase offer price is the same and the terms and the conditions are the same, if one buyer is asking for, seller help, he's asking for the sellers to pay his closing costs, and the other one isn't, it's much more advantageous to take the deal that's not asking you to pay for their closing costs. Again, because sellers want to, take the most profit home, the most money home when they're finished selling their house, so they can go on and, live their life and do their next thing.
Yeah, exactly. So, we figure the net proceeds, which is going to be the sales price minus the subsidy that the seller needs to give at closing, and whatever that subtraction is amounts to be, that's what they bring home, and they want it to be as high as possible.
Absolutely. Exactly.
Yeah. So contingency take home number 2, decide how much you really need to ask the seller for and minimize it. And if you can, compensate in your offer price for it to some extent. And of course, discuss that in detail with your realtor so you can come up with the best, strongest offer.
Mm-hmm. Absolutely.
Yeah.
Oh, go ahead.
I was going to say, do we have time for one more contingency?
Yeah. So last but not least, kind of to circle back, I guess, to the financing side of things, this is a little bit more of a difficult contingency to remove. And I don't always suggest this, but what you can do is come in with an extremely solid financing, and sometimes you can remove the financing contingency, which is extremely attractive to the sellers because it shows that the financing is strong and it's very unlikely that it's going to fall out. There's basically 3 levels of qualification when you're looking for a home. Pre-qualification is an extremely basic ballpark, verbal qualification. It just lets you know simply what loan product you're going to qualify for and what purchase price you should be shopping for. When a buyer is serious about a particular property, we do what's called a pre-approval. They provide income, assets, and credit documentation is reviewed by myself or another loan officer, and we're able to provide a pre-approval letter. That kind of is your ticket to submit an offer on a particular property, and is the bare minimum to do so. Some lenders provide what's called a TBD approval. And basically that's taking that loan file and submitting it to an underwriter. And it's done before there's an actual property. So the underwriter is only able to sign off on employment, assets, down payment, and credit information. But it does provide an added layer of strength when you're submitting an offer. And it can help sellers feel, even more confident in the financing. So again, it's not a cash offer, but it's the next best thing. So coming in with the strongest level of approval is another great way that we can set our buyers apart.
Yeah, that's terrific. So I think that's, contingency take home number 3, get as far as you can in that financing process so that it almost becomes, null and void might be too strong of a term, but it's close to that by the time you offer. So they see it as a low risk next to cash. That's a great way to put that. I like that, Craig.
Thanks, Trish.
That probably wraps it up. I feel like we've done a great, hopefully we've done a great service here, scratching the surface on some contingencies and loan products in some ways to make your offer as strong as possible. There are many more details to discuss that I know it would be a little bit much to cover in one video, I think. So please call, comment, private message us. Feel free to reach out, comment below, whatever platform you're on, and we'd be happy to discuss your specific situation.
Absolutely. Thanks again, everybody. Again, I'm Craig Collins with Sierra Pacific Mortgage. I'm here with Trish May of Keller Williams. See you next time.
Bye-bye.